Hi, it's Jeffrey Cohen, Chicago Quantum, investment advisor representative for U.S. Advanced Computing Infrastructures. We're here to talk a little bit about the stock market, bond market, commodities, where are we headed. It's Wednesday, August 17. Good morning. So the most important thing is options expire on individual stocks on Friday. So we would expect a lot of kind of action and excitement. And last night, we actually sent out a tweet that the VIX was up about 17% last night. And so what that means is that people were most likely out buying insurance, buying downside insurance on their portfolios. People were buying downside insurance on their portfolios. So that does something, right? You know, when people are short, they're nervous. When people are long and they buy portfolio insurance, they're not nervous at all. They basically just locked in their gains. So the market's been up like 20-25% since the bear market rally started. We could take a look at that. And that implies now that people are happy with those gains. They're willing to spend 1 or 2% to insure it. Now it keeps going up, that's great. But they've locked in a floor without actually having to sell and incur all the changes. So we're going to take a look. We ran our down run and our up run yesterday. So the QQQ was at 332. It's now at 329. So it's down 1%. The spider at 426. It was at 429, so it's down about 0.75%. The IWM, or the Russell 2000 ETF, was at 201. It's now at 199, so down 1%. And so it's interesting, right? Markets are down slightly. Doesn't look like there's a ton of trading volume or a ton of movement, but just nice to see that they're down and that maybe our bear market rally can continue again. Or maybe the bear market rally is over and it's time for things to start, correcting back to where they were. So first thing I want to do is I want to check the stocks that we're interested in, right? So we had people ask us yesterday about TTOO and Avaya. We have not looked into those. That would be today. We are long AMS and Corbis, and we are short HNRG, and we own warrants on D-Wave because we're very supportive of Quantum. We are Chicago Quantum. So it's important for us to have a bit of an ownership stake there in the D-Wave folks. And so, but the markets were up. The markets were up significantly. And so I think it's just important for you to know that, right? And so where are we this morning, right? Let's take a look. Let's start with computers and chips. So this is kind of old economy stuff. So if we look pre-market, you can see it's predominantly down. Hewlett-Packard, Apple, IBM is down, Oracle, Microsoft. So these are things that people spend money on, right? I mean, I bought a new computer. It's sitting right up there. It's a beautiful new computer. But, all right then. Pre-market, trucking, transport, trains, logistics, down. My guess is the futures are going to be down too. And semiconductors, chips, significantly lower. Only 2 companies are not down and they're flat. All right, we don't really have to go through all of this, but I like to follow cannabis and tobacco. So we have been smoke free. We talked yesterday about our neighbor. Don't smoke. If you have a chance to not start, don't start. If you are a smoker, take a chance to quit. So dangerous for you. Our neighbor died. Smoker, drinker, smoked a lot of pot. Took the COVID booster, and within a few days was deathly ill and quickly died. So just be careful. We look at the Bitcoin. Bitcoin's at 23,750. That's down, right? So Bitcoin is down over yesterday. And your physical miners, your physical steel companies, and your crypto miners are all down. Let's take a look at coal. Coal is down pre-market. Not a lot, though. Not a lot. Specialty retail. And the reason is we're looking at thermal coal, and it gets cold in the winter. And people need electricity. And so my understanding is that coal spot prices right now and future prices are quite high. And that near-term coal prices are higher than long-term coal prices because there's a squeeze right now on coal supply in the spot market. So anyone that has like an extra coal mine worth of production or could ramp up a coal mine could make a lot of money. The problem is it's hard to find people who want to dig for coal under the ground. Surface mining is more expensive. So let's think about it, right? I mean, most people I know, they don't even want to go to an office anymore. They want to work from home. They want to have unlimited time off. They want to feel nice about things. Can you imagine getting up at 3, 4 in the morning while your wife and your 6 or 7 kids, right? Maybe they get up and they give you breakfast, they fill your thermos, and then you go off to the mine and you go underground for 12 to 14 hours. That's tough work. That's physically backbreaking work. And you have to be very diligent because it's very dangerous. Yeah, I'm not seeing a lot of people going into coal mining. Our daughter is delivering groceries, so that's a little bit different. So where are we at? Yeah, get on my high horse. Got to get me off the horse, man. Oh, Bed Bath and Beyond BBBY is up again in pre-market. That's interesting. That's a meme stock. So BBBY up pre-market. What's interesting is I thought this stock was going like bankrupt. I thought there was a BK risk where they put themselves up for sale. It sure looks like AMC and GME and Mullen and Vroom. It looks like Auto. It looks like ATI Physical Therapy. It looks like Party City. And there's probably 15 other stocks I can give you that it looks like, right? But for some reason, it's up. So just be super careful. Price to book is minus 7.5. It's crazy talk. So careful. Don't get sucked in. Let's look at the money managers. How are they doing pre-market? Now that's interesting because, first off, Blackstone, a lot of these guys pay a healthy dividend, a very healthy dividend. Right, but they've got to have upward moving markets, right? And so you can see BLK is down 5% pre-market. Wow. And one of our favorites, BX, Blackstone. Not that we have any favorites, because we also like CG, and we also like, well, we don't really like MS. We like CG, the Carlyle Group. We like Blackstone, and so they pay a nice dividend, right? And so Blackstone pays a very healthy dividend. Very healthy. And it's fairly low risk. It's actually consolidating. So if we look at Blackstone and we look at the Carlyle Group, right, this is the best way to buy brains. And KKR, you're just buying smarts, right? Who doesn't want to buy the smartest people in the room? I do. I like the smartest people in the room. I want to be around the smartest people in the room. I actually don't want to be the smartest person in the room. I want to hire the smartest person in the room and have them come to work and tell me all the smart things they're thinking about. Yeah, so Carver Bancorp is at top of the list there. It's crap. Just be super careful. Oh my God, be super careful, guys out there. Broadway Financial took a government bailout. Be careful. Farmers National Bank made it to $15. FMNB. I gotta say, FMNB God bless you, man. God bless you. You guys are just working your tails off to get that stock price up. I love it. I love it. I love it. And we're going to look at we'll just look at KRE, which is the banking ETF, not really trading. Farmers National Bank. I want you to take a look at that. The Walking Wounded. Pre-market $10 D-Wave. I would take a look at D-Wave. Now, super high risk. You're betting on the future. But it's down to $10 pre-market. You know, we are long the warrants. And Lightwave Logic. It's up 10. It's to 11.55. Wow, up pre-market. Everyone take a look at Lightwave Logic. That's worth a lot of due diligence. Gartner's not trading pre-market. Rackspace is down. I did a video on Rackspace a while ago. Nobody watched it. Who cares about Rackspace? So all the troubled waters are down or flat, with the exception of EJH, which is up slightly. That is a foreign company, though, so just be careful with the riskiness. And then we're going to take a look at our holdings, just because, you know, I want to take a look. Corbis is up to 26 cents. Now, I do want to say this. Not there. Here. Corbis is a very interesting stock to follow. So yesterday, we were following it, and it's worth pulling it up. You should know about this, because this may be happening to your stock. So we're going to do the full screen 1 day price action. It doesn't have to be 1 minute, but it could be 1 minute. Let's see if it still shows up in the 15. Yeah, okay. No, it's still too yeah, it's not bad. It's not bad. So here, let me show you. And I'm not a chartist, right? I can't chart to save my life. I'm not even gonna try, right? But what I will say is this. Stock trades in a range from 25 to 27 cents. That range is pretty sacrosanct. I bet you if I continue with the chart, you can see it. So it really hit that range in August. And I've seen a lot of chat room activity on Corbis. It's just kind of, it's moving, right? And so we're going to draw a doodle right here and say this is August, okay? So the behavior changed. Now there were a couple times when it popped up over 27 and you saw relentless selling. Couldn't last, right? Look at that. Couldn't last. Tons of selling, right? And so I got to tell you, we look at the stock and we think, you know, we're bulls. We're long-term bulls. And it's so frustrating because I want to say my position is down 65% in Corbis. So it's tough. It's a tough place to be. And so we're watching the stock, and right here yesterday, but in general, it trades between 25 and 27 cents. People buy it at 25 and they sell it at 27, and they buy it at 25 and they sell it at 27. Or they buy it at 25 and a half and they sell it at 27. And so yesterday, there was a battle of the tape right around 25. And what happened was that there were a lot of orders at 25 cents. It was great. And so what happens is you get this wall of supply where everyone wanted to buy it at 25. You also see it back here, right at the end of right here, right at the beginning of August, in the middle of August. You get a wall at 25, and so it's not that common that you see it, by the way. It really isn't. It really isn't. And so you get it these periods when the stock hangs on at 25. And so, I use this. I use let's find an actively traded stock so you see what I'm talking about. This is NASDAQ Book Viewer. We pay $15 a month for this service. And it's a good service from NASDAQ. Let's look at Tesla. Tesla's pretty active. No, Tesla's not that active today. Who's active today? Verizon? No. Come on, guys. Who's active? Who's a big, fat stock this morning? Ear. Oh, BBBY. Duh. All right. And we'll go, and so you can look at like 120 transactions. You can sort it by price, and so it'll consolidate up. And you can see here that there's not really a wall, except there's a little bit of a wall at 2450. 2,800 shares, 2490, 3,300 shares. And from selling, it's 2578, but that's only one order. And then you've got 26. So for purposes of discussion, you have a wall at 26, and you have a wall at 25. And so 25 and 26. BBBY. So here it is. Here it is. BBBY. So let's take a look. Pre-market, it's between 25 and 26. And so you can't really see it because Yahoo Finance doesn't show the pre-market. That's too bad. 25 and 26. There's a wall. See this right here? There was probably a wall yesterday. Let's just do it as a line, right? It was probably a big fat wall right there at 25. And so what happens is today there's a wall between 25 and 26. I don't know if that's exactly 26, but it's close enough. And so that wall kind of gets remembered. 25 to 26. If you're just tuning in and you're like, okay, Chicago Quantum, that's great. You got this algorithm, terrific. But help me with the trading part. And I would say so. Bed Bath & Beyond fell yesterday. Actually, it went up to 2065. It dropped like to 20. But this stock wants to be here. And there's people that want it to be there. And so when you look pre-market at it, you can see it's 25, 16 orders, and 26, there's 15 orders. And so that sure gives you some confidence if you're a trader to buy it at 25.43 and sell it at 25.46, because you know that there's like this circuit breaker at 25 and 26. You're going to be able to get out. You've got some liquidity, right? So worst case, I lose 50 cents. I feel great, Jeff. Got it. But here's the thing. So what happened yesterday with Corbis is that all of a sudden, so even I bought a little bit at 25 cents at 0.15. So 2515. I put it in, I bought. It was tiny. It was I mean, for me, it's a lot of shares, right? But it's fine. And then all of a sudden, boom, all the 25 orders were gone. And the first thing I looked, so they were all gone. And so the first thing I want to look at, I want to go to the 1 minute interval here, right? And so you can see how defend the 25. We're going to clear the drawing and we're going to do this again. Not with a doodle. I want a good hard line, right? The battle for 25 cents was aggressive. We bought at, no, that's too low. I'm sorry. The battle for 25 was right here. Okay. we bought right here. We felt good about it, right? Then all of a sudden, the new line was at 24. Now that's a big move for this stock. Okay, so and it happened like that, and I looked and I thought maybe somebody bought all the stock. It's possible that somebody bought it all. But why would you buy at 25 just to then have the stock drop to 24? Normally, if there's a lot of buying pressure, you kind of buy your way to 26, right? And so what happened was there was a just rug pull. And this is what I'm trying to explain, is that the rug got pulled right there. All the orders were gone. All the orders were gone. And then blah, 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 a lot of bullshit. Pre-market, it's up to 26. But they were all gone. And I had already spent my money at 25.15. I wish I would have waited and had my orders in at 24. I'd have saved a penny a share. Which, if I'm then going to just wait and sell it at 27, I make 3 cents, I make 10%. I make 10% of my money. Oh yeah, I could do that in what's going to take like 3 days for it to be 27 again. I could actually sell it in pre-market right now at 26, make 2 cents, which is about 8%. I love it. So this is what happened, and I'm so frustrated because I feel like I could be trading for a lifetime and not see this, and see this, and learn it, and then not learn it, and learn it, right? So the point is, there are people who make a living trading Corbis, and probably 50 other biotechs, and they just pulled the rug. Total rug pull. Wow. So I just wanted to point that out because it doesn't give me a lot of confidence in my stocks. It tells me that during summer doldrums, when there's low liquidity, pools of traders can make things happen. And so Hallador pre-market is down 4%. Corbis is up 6.5%. American Shared Hospital Service is up 0.14%. The volume yesterday was not that healthy on anything. 21,000 shares. Oh, by the way, we bought more AMS yesterday as well. And so if we were to take a look at the tape on AMS and Hallador, we're not buying and selling anything right now. We did some commentary with some people on Twitter, and so I don't feel right to change a bunch of positions. I feel like I've got to just kind of stay the course. Otherwise, I've got to do so many disclosures, it's going to make my own head spin. So, so Hallador is weak right now over the 5 days. And they had earnings. And we read the earnings twice, and we really got into the details. We looked at the mine disclosures. I'm glad I'm short Hallador. I'm very glad. So if you look at American Shared Hospital Services, I think you're going to see the same kind of story here, which is there's a line in the sand being built with American Shared Hospital Services. And the funny part is we're not drawing the line. I don't have enough money. I got like a couple $100 here to trade. I'm not the play. I'm not in the Players Club. I'm just hanging out, right? So if you look at from like 275 to 285 is where it's trading now, and the reason is that they doubled their earnings. They raised revenue 12.5%, and they doubled their net income to 8 cents a share. They got $1.91 in cash per share right now. And they're a leasing company. Like they offer financing on really, really technical things, radiological cancer treating equipment. And so that's a risky, nichey kind of business. But if you've got the money, oh, and they refinanced all their bank debt, and they've got tons of bank lending capacity, right? And so if you look, the news came out, and the stock went up. And I love it because if you go back far enough, you see that this is quite a risky endeavor for a stockholder because this this is tricky. You gotta really want to be in this one, right? Because look at that. Let me get rid of this. These are stupid drawings. What's funny is I don't even know how to draw a trend line in the right way. I'm not even gonna try right now. Doesn't matter. I just want to show you what I think with this stock. So, stock's got a floor of about $2, 220. And it could probably hit $3. It's probably going to hit $3. It's probably going to go back up to $3 like it was a year ago. But the stock could go higher because their earnings, their fundamental underlying value is up. But it doesn't trade 28,000 shares. There have been days where it traded 1,500 shares. And so we decided to start being more active and building a larger position. We've never sold a single share of AMS. I'm not sure we will for a long time. We like what the CEO is doing, and we are very supportive. So that's cool. Look at that. BBBY is up to 27 and change. So where's that? It was 25. So 25 orders at $25, but they're smaller. Let's look for another 25.20. There are no stops. And there's actually no real stops on the up. So here it is, 28. So everyone just decided to move their wall to 28. So my guess is it's 20. It's not 26. It's 27. The closest wall you're going to get is 27 now to 28. And so people have kind of like bracketed up. So now I feel safe again. I could buy at 27 and a quarter because I know I can get out at 27 or I can sell at 28. And so we're just moving the brackets higher. And maybe that's what trading is all about. If I can make 10 cents, 50 cents, but I could hold a little bit longer and hope that those brackets move up. We broke through 27. There's no wall at 27 anymore. Oh, that's bad. That's bad. The next floor is at 26.50. 26.50. Oh boy. So the thing moves. And now we're looking, is it 28? Yes, it's 28. Okay. So it's not going to probably sail higher than 28. So you could be buying and selling this thing all morning. All morning. You make your money before anyone else even wakes up. Now, that's not our business. That's not what we do. But there are people that do this and make a lot of money and love it. So good for you. BBBY is a good example where if you've got liquidity, you could be buying and holding, and then maybe sell, take your profit, buy again, maybe sell quickly, maybe buy and hold and sell. And then at some point it hits 28, 29, 30. Now you start selling and you sell it all the way down. So you've made your money back and forth all morning. That's cool. There's people who do that. I get it. I love it, right? So here I see one order to sell 7,780 shares at 27 cents a share, and then 4 to sell at 27. I wouldn't even say there is anything on Corbis, right? There's no floor. There's nothing. Does seem to be at 25 cents and 24 cents. We're going to have to open up some more columns here to see if it's so when we look, it's we aggregate it up. So that at 25 cents and at 24 cents, there's a massive wall. 25, 24. And so, but what I realize is that they're nice round numbers. And some of them are clever, like 9999, because my guess is there's people on Discords right now saying, all right, we're building a base underneath. We're going to get some suckers in here to buy some stock at 27, 26, right? Because we want to sell it at 27. And then we're going to go back later and we're going to do the same thing where we tank the stock and we buy it back at 24. So we're going to sell it at 27 and we're going to buy it back at 24. So we're going to sell at 27. Now that's interesting. I watch this and I think, yep, this is what's happening. And it's not our game, not our business, but let's take a look. So this whole undercurrent of the market is happening while the market is up and down 1/3 of 1%, or as much as 1%. All right. So that was so interesting to watch, right? So if you're in this game and you're trading, our brokerage, this is why we're probably going to open up a new custodial account with Charles Schwab. We use Vanguard. We love Vanguard. Vanguard is truly a safety net for us. They really keep us out of trouble. But if you look, so let's take a look at where the markets are. So I guess what I just showed myself is the money's being made on individual stocks. And people figure out, oh, BBBY, and let's make our position on Corbis. And there's probably 5 or 10 other stocks that they want to make their position on. And that's that, right? And they make their money and they go home and they feel happy, right? And maybe it's Verizon. 25.60, look at that. It's going to go up. It's at 25. It's 45.65 to 45.80. So Verizon's looking up this morning, right? Now we just bought and sold the options, made money. Although probably could have made more. 4 hours volume is 1.7 million. 1.7 million shares on Corbis. I just want you to think about that for a minute. And then we're going to look at BBBY. 12 million shares, right? So Corbis is like rookie game versus Bed Bath & Beyond. And so Bed Bath & Beyond, right now, my guess is that people are shorting the hell out of it, right? They're gonna ride it down into the sunset. And so I guess the point here is that there is a market to make money in individual stocks that is independent of the direction of the overall market. It happens in the summer when things are slow and maybe kids off school and college, they get their bling bling, right, for the year. Happens in the summer, right? Periods of low liquidity and few people around. So it's kind of quiet times, right? You're not going to get burned by a hedgie who might be sitting around waiting for you. You know, because a hedge fund could right now basically buy a ton of puts at 27. The option market isn't even open. They could short the hell out of Bed Bath & Beyond at 27.12 and just drive everyone. Drive them out. So we see it in Corbis and Bed Bath & Beyond today. And my guess is people are making like $100,000 this morning. I gotta be part of this. This sounds great. You know what I mean? I'm not a trader, but I could get up at 2 a.m. and I could get myself set up, get my whole workstation, right? You know, tell my wife I'll say good night to you, and then we're not gonna chit chat until next week. I'm out. I'm trading all day. It's never gonna happen. Not for me. That's not my game. But I can see how people make money doing it. So if we take a look at the yield curve, right? You can see the curve. It is an upward sloping yield curve with a slight drop on the long. And then I heard something, and I should do some due diligence. I heard that the Federal Reserve, or U.S. Treasury, bought its own 30-year bond issuance. I want to say they bought, I think the number I remember was 38 billion of it this week. So by doing that, they are keeping yields lower, and raising the price of the bonds. This is like, somebody called it a U.S. Treasury put, or a floor under bond prices. Okay, good to know that that's happening. I think it's weird. But that might be why you're seeing that slight inversion at the long end. So yesterday, fixed income, corporate fixed income, was down. Right? 5,600 shares declined, 3,200 shares rose, and new lows only slightly outweighed new highs, right? And so corporate fixed income was down. It's interesting. What else do we see in the market? I mean, obviously your futures are down. But what's interesting is people are still making money. Whether it's Verizon, whether it's Bed Bath & Beyond, whether it's where'd it go? I don't know where it went. It's hiding. There we go. I mean, AMS isn't going to trade this morning. It's silly. Hallador Energy, not really trading this morning. So if somebody wanted to paint the tape, they would go right now and they would sell at 594. And Hallador Energy would panic and everyone would go crazy. Don't paint the tape. It's stupid. Just don't do it. Don't do it. Don't do it. Don't think that you're clever. That's how you go to jail. It's not worth it. Whatever you think you're going to make, whatever 10 cents you're going to make, just don't do it. Don't go to jail. It's not worth it. Just do it right. If you're going to trade, you trade, right? Don't just do that to paint. We don't need artists. All right, let's look at the spider. Let's keep our eye on it. 425. Oh, that's bad. That's bad. That's down 0.75% again. All right. What else we got, Jeffrey? What else are you telling us? Talk to me, Jeffrey. Show me the money. Show me. How do I make money today? Nobody gives a shit about what the market's doing. How do I make money today? So you can see the market, it almost had like a safety valve, right? It was down, it was up. So we're wearing a red shirt. So when companies like Eargo go up to $2.40, $2 a share, you should be running the other way, right? And so we wore a red shirt because we thought today's the day when we see a step back, okay? We saw a step back today. We felt it in the data. And so when you look, and I don't like to just look at all of them. Let's look at mega stocks. Where's the liquidity? The liquidity, it's up on the safe bets. Berkshire Hathaway, banks, Costco, Home Depot, Walmart, Pepsi, Amazon, Johnson & Johnson. It's down Broadcom, risky stuff. Eli Lilly, will they come up with a new drug? ExxonMobil, Tesla. So people sold. Somebody tweeted this. I should go back and find it and retweet it and say you were right. We have a market sector rotation going on right now, from risky to consumer based and lower risk names. We do. We have a rotation. Rotation alert. There it is. Breaking news. Rotation alert. Okay. That's cool. What else we got? I want to see how the war's going on, right? All right. I'll have to look later. I'm really mad the guys did that with Corbis. It really kind of freaked me out. It bothered me all evening. Oh, look at that. BB Bed Bath & Beyond at 29. So, same thing. Same thing. It just keeps driving relentlessly higher. And so, when do you short BBBY? The problem is the market doesn't open for an hour. Most normal people can't get in. They don't have pre-market access. They can't get in. This is like a captive audience of Robin Hoods that are just having a time of their life, making money while the big money guys can't even trade for compliance reasons or whatever. So COVID's down. That's awesome. Treasuries, how we doing? So what's interesting is the Treasury yield is up 5.5 basis points. 30-year Treasury. That's kind of a big deal. That's not very bullish. 10 years up 8.5 basis points. That's definitely not bullish. That's going to hurt mortgage prices. The 1-year Treasury is up 3 basis points, which hurts liquidity of companies. And the 1-month Treasury bill is down 4 basis points, which will make it cheaper, like commercial paper, things like that, real fast money. That's fine. So what we're seeing is there's a pump of liquidity into the market. Liquidity pumped up, driving 1-month paper down. Risk off, baby. Risk off, right? Risk off on U.S. Treasuries. So you got the 1-month yields down, and you've got 10. So you got 1, 10, and 30-year Treasuries yields up. And the 10-year yield is up significantly. So what that says to me, there was probably an auction. So I should do some due diligence on the latest auction, the latest 10-year auction. It's possible that like the Chinese aren't buying, the Japanese aren't buying, that they're dealing with their own issues, right? So that would tell me, go to CNN and see if China invaded Taiwan. Oh, that's weird. That's weird. That's weird. We're not going to talk about that. Where is global news? I mean, we got Ukraine. Where's Taiwan? Oh, great. North Korea is still firing stuff. There's no news on Taiwan. How can that be? All right, so there's no news on Taiwan means we're painting a tape on that one. Let's go to Zero Hedge. They usually give you a little more excitement. Nope. So it's so interesting, right? So Ukraine is page 20, 1-column news. Taiwan is not even in the newspaper. inflation is fixed. No news. No news on inflation. Nope. The news is on the drought. Okay. Oh, and Liz Cheney, who nobody even cares about. I can't even spell her name. By the way, I loved her dad. Dick Cheney. You don't fuck with Dick Cheney. Liz lost her seat. She lost her congressional seat in Wyoming. But that's interesting to me. Just so you know, right? That is a different narrative. They're painting a different narrative today. And why would they do that? I don't know. Europe is down bigly. Europe. Down bigly. I love that word, by the way. The VIX is not up anymore. The VIX is only up a little at 2050. So the VIX moderated. So the big bets were made in Asia. It's so interesting. The Asian markets bought the puts against the S&P 500. That is so interesting to me. I mean, I'm making a sweeping generalization there, but the VIX was up huge last night. Not so much now. And look at Chinese stocks up, Nikkei's up, Asian markets were up. Asian markets up significantly last night. And it looks like they spent some of their earnings to protect their U.S. equity positions. It's a good story. It also could be the global players doing that. It's probably easier to trade Asian hours. Probably. A little less liquidity. You probably pay a little more, but nobody sees you do it. Futures. Oh, how's the cat doing? Cat's out there. Bond futures are down, but honestly, I don't know. Bond futures are down, but it's hard to tell. I can't read anything into it. They're just down a little bit, like a quarter to 1%. Okay, that's fine. So that's not a lot of movement. The Russell's has been a relentless drop down to 2,000. The Nasdaq, that's 1%. It's dropping all morning. They must have saw my red shirt and thought, oh, if Chicago Quantum is bearish, we're bearish. We hate this market now. We're out. I don't know that we're out, but because truthfully, we're in it for the long haul. We're riding this market. What am I going to do? Take the money and hide it under a mattress? I'm in, and I'm even more long today than I was yesterday. It's awful. It's awful. I feel like the biggest sucker in town. I am long this market. So the implied open is significantly lower. Market's going to open red. I'm wearing a red shirt. It's bear market rally. Bear market rally. So how we doing? Show me the money, Jeffrey. Where are we at? Pre-market. Hallador's down. Corbis is up. AMS is up. That's not bad. I'll take it. Bunch of stuff here. So the one thing I do like to look at is breadth. So breadth was good yesterday. So breadth was down on fixed income, but Equity breadth is still solid. You've got 80% trading above the 50-day simple moving average. It's only 34% above the 200-day simple moving average, but that makes sense because it is a bear market rally. Takes time, right? But you're looking at 150 to 60, so that's 2.5 to 1 new highs to lows. You're still seeing a market drive stocks higher. Just know that that's out there. Know that it's happening. Bitcoin, not good. So the question is Bitcoin going down because equities are going to go down? Bitcoin dropping a little. U.S. equities dropping a little. Do we have to add Bitcoin to our model again? You know, we tried, but it hadn't traded for a full year. We might do that. We might add Bitcoin to our run. So we took out all of the other ones. The only one we have in there is Spider for the S&P 500 index ETF. And we do that as like a benchmark for our model. It also helps us calibrate to make sure we're not freaking crazy with our data. But Bitcoin would be interesting. My guess is Bitcoin is going to have a very positive beta. Foreign exchange, US dollar is up. US dollar is up. What's interesting is short money. Short money is paying a lower yield, but everything else is just, ooh, the 1-year treasury is lower now. All right, so 1 month treasury is lower, yields. 1-year treasury is lower, yields. And you're seeing a correction now on the yields. So, yeah, maybe it's not a flight to safety. What else we got here? Greed is driving the market. There you go. We've moved to the greed index. I actually don't know what that means. My guess is that's a contrarian indicator, but I don't know. It's weird. We have new data? Not yet. Tomorrow. I want to see that Fred data on assets, balance sheet assets. Interestingly enough, 30-year fixed rate mortgages are up to 529. That makes sense to me. That's just going to hurt housing even more. I did read that housing inventories are up. New housing construction and permits are down. That buyers are walking away from house contracts. I'm reading a lot of housing bears right now. I don't know. It's early. I'm reading housing bears, right? It's interesting. So what do we got here? Anything happening with the stocks that I hold pre-market? Nope, still exactly the same position. There are a few stocks we said we were going to look at. Anything change? You know, I like to look at semiconductors because they're like your lightning rod. Whoa. ACLS is down 6%. That's one of the small caps in this industry. Regional banks. Any excitement on the regional banks pre-market? Banks are the sleepiest part of the market. Nope. Same stuff. Carver on one end. Berkshire Hills and Broadway Financial on the other. These are just risky stocks I wouldn't touch with a 10-foot pole. D-Wave looks like it's going to open lower. I think I'm going to buy some today. I think I am. I think I like it. Qubits. You heard it here first. That's about it. Money managers. God, I'm getting tired. I need more coffee. So the money managers moderated. They're not down like they were. So, all right. Any news here? Target earnings miss again. Target earnings miss again. What happened to Target? That's probably what's driving this market. So you type SEC, Edgar, search. We look at Target, which I want to say is TGT. Yep, Target Corp. It's so easy. By the way, don't trust all these links from social media. Go straight to the Securities and Exchange website. Go straight to the earnings release. They have to publish it. All right. Comparable sales grew 2.6%. That's not bad. Oh, wait. Inflation's 8.5%. So actually, real growth was down 6%. Okay. Very nice. Operating margin rate of 1.2%. That's tiny. As a result of inventory actions, the company reduced its inventory exposure in discretionary categories, think TVs, while investing in rapidly growing frequent categories, think milk. Adjusted earnings per share was down 90%. Okay. So Target didn't keep up with inflation. Target's in trouble. Target's in trouble. Forget Verizon. TGT. Target had a really bad quarter. And I don't know if that's Walmart versus Target. So forget BBBY. Let's look at Walmart, baby. How'd Walmart do? My guess is Walmart reported better performance. So look at that. Bed Bath & Beyond is up to $28.69. So I love how these traders are working together, right? So 2,500 shares at $28.30 and 1,000 shares at $29. So they're trading between $28.30 and $29, a little safety net right there. And they're just going to trade. They're going to make a few bucks, make a few pennies. I'm in, I'm out, I'm in, I'm out. What are these guys even doing? It's great, though. If you can make money doing this. So, is Corbis trading? I don't know. I got too many things open here. It's interesting because you see how you kind of have to have ADHD a little bit in this market to see everything going on. So what happened to Walmart? We already looked at Target. Let's go company search. This is the Edgar website. WMT. I promised everyone yesterday I would look at Walmart. Let's look at the earnings release. The presser. Strong top-line growth. Total revenue was up 8.5%. Okay, so Walmart kept up with inflation. Target did not. U.S. comp sales grew 6.5% and 11.7% on a two-year stack. So 6.5% slightly below inflation. Sam's Club slightly above inflation. Great. Global advertising business up 30%. That's just printing money right there. Okay. Consolidated gross profit rate was down 132 basis points, or 1.32%. Operating income was only down 7%. Remember, Target was down 90% because they dumped a lot of their inventory, discretionary inventory. My guess is Walmart did not. It's crazy. Revenue's up 8.5%. Revenue is up 8.5%. Walmart kept up with inflation. Operating income was down only slightly, which makes sense because they warned about inventory. So, yeah, my guess is that Dollar Tree is going to be another strong performer in this market. Did Dollar Tree have earnings? No, not yet. Okay, they'll come out. Very interesting. I have no idea what all that stuff was. That's interesting. Bed Bath & Beyond still up, $28.46. So if I was a betting man, BBBY, I would be doing either shorting it or long the puts at the open. Drive that thing down. There's no reason why it should be $28.35. Seems very high. My guess is you won't have the chance. My guess is it's going to crash at the open. You won't have the chance. Corbis looking good there. 25.86. I just can't get myself to sell it. I think Corbis is a $3 stock. I can't get myself to sell it. I don't want to sell it. Now, Hallador's recovered pre-market. Somebody said I'm going to buy 100 shares. They're going to paint that tape, baby. All over the place. So let's see. Anyone texting? Anyone typing? Anybody there? Hello, everyone. What else we got? So no one's there. I'm just going to go crazy now. Let's just take a look. Let's see. Where's the money? Show me the money, Jeff. Mortgage-backed securities are down. 30-year rates are up. 10-year rates are up. 1-year rates are up. 1-month rates are less down. Russell's down. Nasdaq's down. S&P's down. BBBY is up, though. It's very exciting. Pre-market, looks like we're moderating a bit. A little bit, not much. You get an implied open that's lower. It's true. Our holdings, let's see. And the stocks people asked us to look at. So pre-market, Corbis has moderated. Hallador's still down. AMS is still up slightly. Any news? See, it says retail sales cooled, but I don't know that that's true. I think retail sales at Target cooled. Retail sales at Walmart were fine. Walmart stock looks great at 139. Target at 176. We're just going to have to see. There's gloom and doom out there. So here's the deal. In my opinion, in the opinion of Chicago Quantum, we need to either end or win or negotiate a settlement to the Russia-Ukraine crisis. We do. It's time. It's time. We're publishing things about nuclear war killing 5 billion people. We're talking about energy issues. Ukraine infiltrated Russia really on our recommendation. To take out their energy infrastructure. By the way, that's the way Ukraine wins this war. And we still support it. We still support Ukraine. Right? Russian speakers. You can wear the Russian hat. I got a Ushanka. Those look nice. Get in there and basically just take out all the nuclear plants. And even coal burning in the eastern, in the western 1/8 of the country. Hit one time zone. Kursk is perfect. Right? But you've got others. You got Voronezh. You got Moscow region. And while you're at it, Belarus shouldn't get off Shouldn't get off. Belarus. Whatever they have. They got 1 or 2 plants. You take those out too. Right? And so Ukraine says, if you're going to hurt me, I'm going to hurt you. And you basically can reach a strategic détente here where basically Russia and Europe freeze to death all winter. That's a really, really hard price for everyone to pay for Russia trying to steal some land from Ukraine. And I think Russia pulls back. We want 100% surrender from the Russian bear. We want them to pull out of Crimea and all of Ukraine. Right? They can do what they do in the United States. They can influence elections in Ukraine. They could probably run ads, support candidates, like they do in the U.S. but no military aggression. I think you target the energy infrastructure. You don't kill a single civilian that way. Wrap it up. We don't believe in killing. Chicago Quantum is not supportive of killing of civilians, just so you know. Military targets only. Energy infrastructure is a valid military target in the old Soviet Union. And you take it out and you wrap it up. All right. I want to thank you guys for listening. That was kind of a grim note. Right? But I still think when the news is turning away from China, the news is turning away from Russia, it's turning away from all these things, it's because someone's trying to hide something. Someone's trying to sell a different narrative. And so, good luck today in the markets. Markets are going to open lower, right? You kind of have to have a little courage there. And thanks. If you like the video, by the way, we're not paid to make these videos. We do it for you. Go ahead, hit the subscribe button. Tell a friend. Share the news. Let people know that you like it. If you see our posts on LinkedIn or Twitter or Facebook, share them. Check out our website at www.chicagoquantum.com and help us out. We're only paid when clients pay us to do runs and projects and research for them. And so, all right, thank you very much. You take care now. Bye-bye.